Hello, everyone. Got some free time on my hands, so I thought I'd drop in here and do a market review. Today is Saturday, November the 26th, 2022. The time is now about 10:40 a.m. And I'm going to start off a little differently today. I want to start off just showing you guys some economic news because this is something that will most definitely affect our markets. Um, so if y'all been paying attention, there's a lot of things that's going on throughout this world that's definitely going to affect our markets. You still got the crisis looming over and the war looming over across seas between Russia and Ukraine. That's going to continue to put a toll on our markets. You got to pay attention to China. China is starting to have some I guess high outbreaks of COVID, even higher than when the pandemic first started, and it's been high for 3 days in a row. That's going to affect a lot of companies, especially companies like Apple. Apparently, one of their plants over there just shut down completely. So pay attention to that over in China, what's going on with the COVID outbreaks, as well as paying attention to, keeping in mind that we have another Fed meeting coming up on December the 13th and the 14th, and another CPI data print around that same time. So, but prior to we even get to the Fed, there's a lot of things that's looming right now. That's definitely going to, probably put a damper in markets. And this is one of the big ones. The railroad strike, the pending railroad strike. And I know the government is talking about, trying to jump in and try to save face again. They did it before a couple months ago. But there's a lot of analysts saying that this one possibly has a stronger possibility of actually being pulled off versus the federal government being able to step in and save face this time. So with that said, and this is the article. This is one of the most recent articles I was able to find, and it says with unions aligned, timeline for rail strike and railroad emergency prep is now clear. So, in order to prepare for a possible railroad strike, a lot of companies and corporations are preparing in advance. Just the threat of the strike is what's going to cause problems. So the threat of the strike, and as it looks now, it says 4 rail unions have aligned on a potential national strike date as at the date of December the 9th. So with that set for December the 9th, a lot of these railroads are preparing ahead of time. So they're preparing ahead of time with just the threat of a possible strike. Because railroads began preparing for a strike 7 days ahead of that date. So that means next week, folks, these rail companies could already start, a lot of companies are already starting to prepare for a possible strike ahead of time. So some cargo is going to stop, being delivered, and things going to shut down as early as next week. Chemicals take priority in rail strike preps, with transport of this sensitive cargo stopped 96 hours before strike. The railroad industry expects economy damage of around $2 billion a day. Other industry groups have warned of a direct hit to GDP and inflation increase. So just imagine what this can do to a lot of stuff, folks. I mean, this is going to, everybody's going to feel effect of this if this happens. Everybody. This would definitely hit GDP and inflation in a big way. Inflation data comes out well after this strike is supposed to start, several days after. So this could be a big month for our economy and for the stock market in general because of everything that's about to unfold. So keep that in mind as I review what the charts are showing us right now. So now go right to, I'm gonna look at all the futures charts right now because they're showing a better picture to me. And I'm gonna look at weekly charts. Not even gonna show you the daily charts right now because weeklies are starting to really show some resistance levels that are starting to be hit. And also, I'm going to show you how it relates to the downturn in 2020. So this is a 3-year weekly chart of the Dow Jones futures. And as you can see, this blue line represents my 50-day moving average. Price action has been, it's been on in rally mode since the beginning of October, up to a specific point. And you can always spot Pacific pivot points by taking a look at where price has been before. So this key reversal point was a reversal point that was hit back in August when we got a reversal back to the downside. We're right back at that level now, just hovering there. Now, not only are we hovering there, but look at the volume. Volume has been trending lower. So as price action has been rising on the weekly chart, the volume has been trending lower, and that is negative. That is negative for a continuation of this rally. All right, so keep that in mind. If this is a strong rally signifying a new bull market, then we would have wanted to see over the past several weeks, not price, not volume dropping, but volume increasing as price increases. But has not been the case. Price and the trajectory of the market has been rising, but volume has been dropping week in and week out as this rally continues. Now, keep that in mind. And again, we're right back at an area of resistance with all of the news that I just showed you guys unfolding. So there's nothing positive going as this rally continues to go on. Eventually, it's going to hit one of these resistance levels and it's going to reverse. That's my speculation. We're going to end up hitting this one of these resistance levels and we're going to reverse. Now, the problem is if we cannot break through these strong levels of resistance with some type of good news coming forth, and we start to pull back from here, I suspect that we will retest this area here again, which is right around the 200-day moving average on the Dow Jones futures. Now, look at where that test is, right at the level that we actually started to fall from back in 2020. Now, if we test this level this time and we don't hold and we really start to trickle lower, we can really see prices really start to break lower. And then when they come back to test, not be able to break back above this level. That's what I'm looking for the next next month or two. We could possibly drop below this level and then try to rally back up to break back above the level and then fail and stall out right here if we do get another bear market bounce. So keep that in mind. We're right at a level of resistance. With all the news unfolding, we could stall here and then eventually pull back and possibly over the next several weeks attempt to test this 200-day moving average again, which is the same area that we have fell from back in 2020. So if we break this level of support here, it could be very, very bad for markets. Now, I guess one of the positive points is that we bounced there before here and we dropped this a little bit before here and we bounced again and rallied. But we've been every time we got these bounces, we've been unable to break above these key resistance levels. So bounce there, but fail. Bounce here. Now, the question is, do we fail? I guarantee you next week is probably going to be the telltale sign if we fail. So pay close attention to that. That's the Dow Jones. Now, Dow Jones futures. Take a look at the S&P futures weekly chart. You're going to see the same type of scenario being muted by or being held back by levels of resistance. Those strong rallies we've seen in here, every time we get these bear rallies, bear market bounces, we got a strong bounce from June to August. Then we pull back. And then from October to where we at now, to the beginning of December, we are close to the beginning of December, another rally right back up to these levels, which where we had a tendency to fall from each time. So do we do the same thing again? Do we fall from this level again and create a lower low? We have to see. Because last time we fell from this position, we created a lower low. This low is lower than this low. So do we fall again? And we could potentially see the S&P, if we fail from here and we continue to drop, we start to pull back and we break this previous low, we can see Dow actually drop down to about, the S&P drop down to about 3,500 on the futures. That is a possibility. All right, that is S&P futures. Let's take a look at the NASDAQ futures. The weaker of the bunch, its rallies have been very short-lived and they have not been strong at all. So it had a nice strong rally back from June to August. But this June to August. Oops. See that. So this rally from June to August. Then we got the pullback. And then a little rally here. This rally has not been as strong as the rally in the Dow and the S&P. So this is the weaker of the bunch. So this one could suffer a lot worse than the others if we start to get a reversal next week. We can really see this one drop in a big way. So pay close attention to what happens with economic news as we go through next week. That is the NASDAQ. And again, the NASDAQ has even struggled to get back above its 200-day moving average on the weekly. It's just hovering right around it now, and it has not had an opportunity to get back above its 50-day, which is this blue line. Take a look at the Russell 2000 futures. Russell also is one of the weaklings. Okay, as you can see, the Russell has struggled even with this rallies. You know, it's struggling to get above that 50-day. Struggling to get back above a level of resistance that it broke, pulled back from. So the Russell and the NASDAQ have been the weaker of the two, and with decreasing volume. Look at that. So if we get a hit, these two could probably hit, could see the biggest hit first. So pay close attention to what happens next week. We are hovering right around levels of resistance with a lot of crazy economic news about to unfold. So it has the fuel. It has the fuel that it needs in order to ignite the fire. One more thing we'll take a look at is the VIX futures as well. So here's a weekly chart of the VIX futures. I'm going to stretch this out just to show you guys what it looks like. And so in February, we got up to as high almost to 38, maybe. And since then, we've been, every time we get a rally, we've been just been trending lower. But what is forming is an opportunity for a breakout. Because look at the lower highs and the higher lows. All it is just pushing price into a corner. So we got these lower highs, higher lows. So eventually we find a way to, to get pushed into this corner and then possibly break out above. So that's something that we got to pay close attention to. That may take several weeks for that to pan out. But the here and now is we are right at a level of support on the VIX. And right at the 200-day moving average again as well. So the question is, next week, does the VIX break this level of support and continue lower and drop below 20 and continue on down and start a new bull market in stocks? I doubt it. We're still in the bear market too, folks. Just to let you guys know, we're still in the bear market until we see some drastic changes. I doubt if the VIX is going to drop much lower. We have to see how that pans out, but VIX is right at a turning point as well. So next week is going to be interesting again. So I just gave you guys a little nugget of what you guys can follow, pay attention to next week as we go into the beginning of a new trading month. And keep in mind the pending possible rail strike. Keep in mind CPI data around, I think I want to say it's around December 13th. And keep in mind the Fed meeting around December the 13th as well. So there's a lot of data that's going to be unfolding over the next couple of weeks that will in some way, shape, or form affect the stock market and our economy as well. All right, folks, that's all I have for you guys. Until next time, this is Tim Davis signing off. Enjoy the rest of your weekend, folks.